welcome to this online panel discussion on the recent PMLA notifications and its impact on the professional services firms. I believe you would agree with me when I say that there are times that come in the life of a profession and professional person where the person is so unsure about what is right and what is wrong about his action that he wonders what would cost him more, taking a decision or opting out of it. Perhaps many of the chartered accountants and other related professions are in a dilemma after the two recent notifications by the Finance Ministry. As we know, changes have been made to the relevant sections of the PMLA, making it applicable to all client transactions done by any practicing CAs, CS, and cost accountants. Other notification dated 9th May has brought directors, nominee shareholders, formation agent of companies, LLPs also under the purview of PMLA. Chartered accountants have now become reporting entities for the purposes of those which are specified transactions and are required to do KYC of all their clients into specified transactions and maintaining records thereof. Well, we all know PMLA is very stringent and compliance is very onerous. We have also heard horror stories about notices being received by our colleagues, by our friends from the EDs. Though the conviction rate of PMLA is very low, the entire process is extremely painful and can ruin the reputation of a professional. So widening of this definition of entities under the ambit of PMLA has given rise to the concerns amongst the financial professionals that they could possibly not just face the penalty for non-compliance, but also could also have to face investigative agencies, multiple types, including the enforcement director. And it is with this view that this panel discussion has been arranged, where the experts will answer many questions on the impact of PMLA, responsibilities cast on the CAs, probable issues in the implementation, and so on. But before I hand over the proceedings to Kinjal, let me take this opportunity to say a few words about the BCS. BCS is one of the oldest voluntary body of accountants with 73 years of rock-solid history. It was established just 6 days after the ICAI and has more than 8,500 members. And its knowledge dissemination averages about 300,000 man-hours every year. Its publications, with a contribution by volunteers who are experts in the field, have always been much in demand. The journal, published every month by the Bombay Chartered Accountants Society, is one of the most well-respected publications and is widely read across the industry, profession, and bureaucrats. Over the years, BCA, through its knowledge dissemination, dedicated efforts of the volunteers, and the networking platform, has been responsible in creating several domain experts and leaders. It has presence on all prominent social media and has substantial following there. So I urge you to reap the maximum benefits through participation in several activities of the BCAs. If you are not a member, please become a member, because one thing which I can tell you out of my experience is that this is one institution which gives you far more in return than what you give it to it. So visit the BCS website, www.bcsonline.org, and that would help you to have the full view of these activities. Now, I hand over the proceedings to Kinjal for the introduction of the faculty, the guest speakers. Thank you.
Thank you, Mihir Bhai. And it is indeed a privilege to introduce our panelists, Mr. Das and Mr. Taneja. Mr. Das is an advocate and was an IRS of the 1976 batch and retired as the Director General of International Tax. While he has worked both on the policy side as well as on the implementation area of tax law, he has also worked on the tax policy division of the Department of Revenue during 90s. He was also appointed as the member judge in the Appellate Tribunal under the Prevention of Money Laundering Act and from 2012 to 16, and was the acting chairman of the tribunal until he retired. He has the experience of working for international organizations like UNO, the African Development Bank, and also has the doctorate degree in business management, a degree in law, and a master's degree. He is currently practicing as an advocate from Delhi, Mumbai, and Bhubaneswar, and his areas of work is focused on economic and financial laws. Mr. Das, we are very fortunate to have you today here at BCAS as panelist. Welcome, sir. I would now also introduce another panelist, Mr. Ashwani Taneja, who is a chartered accountant and a practicing advocate. He is the former member of the Income Tax Appellate Tribunal, the ITAT, and is a lawyer by currently practicing as a lawyer, then chartered accountant, a company secretary, a cost and management accountant, a graduate, and also holds the LLB and the LLM qualification, and is also a DISA from ICAI. I think as far as qualifications are concerned, he has left nothing which I can miss out. He has been in practice as a lawyer and is focused on the appellate side of the income tax law, and is also representing at the tribunals, the High Courts, and the Supreme Court of India. He was the member of the Appellate Tribunal till 2017 and has delivered more than 2,000 judgments involving large variety of issues on domestic and international tax. He is a prolific speaker on various topics, including the economic offenses, the income tax law, the corporate law, and has delivered lectures and talks across forums and across the country. He was also invited by the Chief Justice of the Tax Court of Canada for membership of International Association of Tax Judges Canada, and has participated in their global tax conference in Finland. He is currently practicing and focused on various economic laws, including the PMLA, the Benami Law, Black Money Act, the FEMA, and other litigations on the economic offenses apart from the income tax law matter. Welcome, Mr. Taneja, and we are also fortunate to have you today as one of the panelists on a very important subject on PMLA, which has now been made applicable to the chartered accountants. And let me now introduce the moderator for the session, Anand Bathiya. Is the fellow member of the Institute of Chartered Accountant, a company secretary, a commerce graduate, and a law graduate, a registered valuer from ICAI, and a certified from the Indian School of Business, Hyderabad, on value creating in financial strategies. He has done his postgraduate diploma in securities law from the Government Law College, and he has done his information systems audit, which is DISA from ICAI. His core expertise lies on various topics of financial structuring, including negotiation, evaluation, and executing complex domestic and international mergers and acquisition transactions, and has dealt with more than 250 M&A transactions over his career of more than 15 years. He has enabled business to raise equities through various sources and has been advising private equity funds, venture capital funds, and family offices. He is also the member on the group of promulgated by the Valuation Standard Boards of India. He is currently the honorary joint secretary of the Bombay Chartered Accountants Society, and is also members of various committees of the Chamber of Tax Consultants, the Western India Regional Council of ICAI, the Indian Merchant Chamber. He is also the independent director of the audit committee of various listed companies. With this, I welcome Anand Bathiya for moderating this session on an interesting topic on PMLA. So may I now request Mihir Bhai to address the speaker at the panelist and start the session. Mihir Bhai, on mute. You are on mute.
Sir, it's all yours. Platform is yours. Please go ahead.
Yeah. So, good evening, everyone. And it's always a pleasure to speak at a BCS forum, especially on a very topical and far-reaching subject that we have today on PMLA. there is a sense of anxiety that these two notifications have unleashed, sure, on the minds of professionals. The anxiety is less to do with any kind of risk of engaging in non-compliances or any connivance, etc. But the anxiety is because of the fact that the professionals are equated with large banks and their reporting obligations are now directly covered under PMLA. This anxiety then takes shape of worry and fear when in today's day and age, sometimes the process of judicial review is sometimes more painful than the punishment that the law prescribes. But on the other side, we understand these changes as also what is the expectation and the responsibility that the government and the society expects from professionals. And which is where as well they say that capability and responsibility goes hand in hand. And today we have two of the finest minds in the country to distill for us, cut the clutter in terms of how should we as professionals be seeing these two notifications. We may be also having fear of the unknown, sir, and which is where also today's guidance and panel discussion will unearth some of those inhibitions which we may be having logically. Friends, what we thought about is that there are a few technical nuances in these notifications. PMLA itself has a little bit of technical backdrop that one needs to understand before appreciating the notifications, which is where Mr. Ashwani has gracefully accepted to walk us through in terms of what are the tenets of PMLA as well as the two notifications before we get into actual Q&A. But Mr. Ashwani, before I come to you, Mr. Das, I just wanted to have a view from you in terms of how do you see these two notifications, or rather, how do we as chartered accountants look at these two notifications? We understand there is a FATF review coming at the end of the year, and some of these changes may be prompted by that. But help us understand how do we make sense of these changes that are coming in the PML Act.
So, thank you very much. Friends, I'll straight go to tell you what is behind those anxiety and worries. And I'm sure by the time I'm done with, those anxieties and worries should be gone. Those are misplaced, not necessary. You see, the money laundering threat landscape is changing all over the world for all of us, and certainly for the chartered accountants for sure in India. The Financial Action Task Force has highlighted threats to national security of India from large quantities of criminal funds being laundered by use of sophisticated corporate structures. Indian intelligence is also aware of it. However, the broader lens is on the bankers, not on chartered accountants. But it brings the role of the chartered accountants and other professionals into sharp focus. Why? Because CAs are regarded as gatekeepers of the financial system of the country. They have now a significant statutory role to play. That's it. So let me tell you the background. FATF is the global money laundering and terrorist financing watchdog based in Paris. It sets out international standards that aim to prevent money laundering activities. They have altogether given 40 recommendations in 2003 and 9 recommendations plus 9 recommendations later in 2009. Those are like Bible for money laundering. India has joined FATF much later, FATF regime in 2010. The mutual evaluation of money laundering control, anti-money laundering control in India took place in June 2010. And the mutual evaluation report is a long one, and I would request every chartered accountant to go through it. At least the portion starting from page 196. Right. It is readily available and publicly available. In the site of FATF, you can get it. The scheduled mutual evaluation for next evaluation was due in 2020. It was postponed due to pandemic to this year. It is taking place. On-site evaluation will take place in November 23, 1st November 23. Now, during the 2010 evaluation, mutual evaluation, the issue of preventive measures in respect of designated non-financial businesses and professions were taken up. Designated non-financial businesses and professions was taken up. I'll call it DNFP, FBP. This includes real estate agents, lawyers, company secretaries, chartered accountants, cost accountants, among professions, casino, gold, precious stone, metal dealers, real estate among businesses. None of the professions were found covered under PMLA regime in 2010. None was found covered. So chartered accountants were not covered. This is a point that was made. Then it was then found in 2010, during the time of a review, the Government of India told that the Institute of Chartered Accountants of India has certain guidelines. It was also noted that CAs and cost accountants under medium risk from money laundering, vulnerability, and under low risk to be threat. That was also then assessed. They are not considered as a bigger risk. Lawyers who will eventually be covered, I'm sure they will be covered very soon, sooner or later, but they were considered low on both counts, right? Under threat and risks. So the Code of Ethics, Indian government pointed out, the Code of Ethics of Institute of Chartered Accountants of India imposes an obligation to undertake a form of a CDD as part of a client acceptance procedure. Section 210.4 of the Code specifies that appropriate safeguards include obtaining knowledge and understanding of the client, its owner, managers, and those responsible for its governance and business activities. And this is enforceable under disciplinary procedure. So this was pointed out by the Government of India, told that there is an adequate internal facilities available for chartered accountants. That is why we have not done it. And this was also noted in the mutual evaluation report that this was noted. Indian Finance Ministry in 2010 projected that this takes care of recommendation 12 of FATF insofar as customer due diligence and record keeping applies, read with recommendation 5, 6, 8 to 11. FATF also recognized and noted that it was early days for PMLA to be extended to DNFBP, which includes chartered accountants, and only insisted that casinos out of businesses be included, and it was done quickly. But that time, FATF also recommended that the government extend the PMLA to businesses and professions as soon as possible. As all business professions, those listed, those I have told, and those they have identified, are perceived to present a material risk to money laundering. They told as soon as possible. We have spent 13 years. 13 years is a long time. Now, the delayed mutual evaluation process is on. We have submitted our reports. What was recommended is 2010 to be done as soon as possible. Had not been done. That is why this Bathiya amendment has taken place. And amendment was made to section 2SA of a PMLA by the government using delegated power under 2 BI to include CH and others among the persons carrying on designated businesses or professions. They were made. This was under delegated power. They did it. Now, you have now joined, CH have now joined certain other categories of persons as listed, like you see, dealers of precious gold, real estate agent. But what you will report and this thing, it is yet to be prescribed. So you are merely, all CH do not become ipso facto person carrying on designated businesses or professions. When they do certain things, they become designated persons. What are those certain things? Are also notified. Buying and selling of a gold property, managing client money, managing bank and securities, this thing, organization of a contribution to creation, operation, management of a companies, creation of management of LLPs, trusts, buying, selling of a business entities. Only then you become, only when you perform these things, you become designated professor. Your onerous duties are only 2 things. Keep KYC of a clients. Clients means you have to also find out who is the beneficial owners, ultimate beneficial owners. You have to take a little bit of a care to do that. And as it is, CH have to do it. You have been doing it. Your institute guidelines ask you to do it. That is exactly is provided. Now in this thing, we are on the same page. And then second thing, the complete details of a transaction, you have to keep for a length of period mentioned there. And what is more important is that the penalty, if you do this thing, is initially a mere warning. Maybe second time, they will ask you to, if you are required to file it 6 monthly, they will ask you to file it monthly. So enhanced this thing, or maximum fine is 10,000 to 1 lakh. 10,000 minimum, 1 lakh maximum. And that they then is not done. If it is done, it is an appealable order, applicable this thing, you can file an appeal before the Appellate Tribunal, where I was member and teacher. My young friend, Mr. Taneja, friend and colleague, will spell out the details. While reporting on your clients, you may feel like that it is like betrayal of a client trust. No, but you are legally obliged to report all the suspicious activities, as you are at the forefront of the fight against money laundering. And you are protected by section 14 of a PMLA from civil or criminal liability for this reporting. And what has happened here today has happened in the UK in 2017. In England, it happened in 2017. Australia, even a year before. And there, it is not 2 things which we have done. There, apart from client due diligence, assessing risk, keeping prescribed reports, and monitoring existing client was also their business, which is you have not been given so much of a lots of onerous duty. So these are my initial comments. Whatever questions will come, I'll address that. I'll request Mr. Taneja to scan the actual notification and the rules. Rules have not been prescribed for CH, and whatever questions will come, we'll address that now. Thank you so much.
Very, very helpful, Mr. Das. That gives a backdrop in terms of the thought process and the journey till now, and a very telescopic view in terms of how should we be looking at these two changes. Mr. Taneja, devil is in the details. The microscopic view is equally important as the telescopic view. May I request the events team to just put up the presentation, and then we'll have Mr. Taneja walk us through on the details of changes.
Presentation I will share myself.
Okay, sir.
Okay. Yes. So thank you, Das sir, for enlightening all of us and paving the path. Das sir is my guru in PMLA. Let me share it with all of you, with whom only I have understood this nitty-gritties of PMLA, what PMLA is all about. We began our journey together on this. And my esteemed mentor, he is my mentor, my philosopher, my guide. And I mean,
Thank you.
I am delighted to have him here today. And our Honorable President Mihir Sheth, our dear Anand Bathiya ji, and Kinjal Bhai, Zubin Bhai, and all the dignitaries sitting across, participating from all over the country. I can see, it's an enlightened gathering today, galaxy of intellectuals I can see in the gathering. And it makes my task little onerous, but easy also, because the kind of participation I'm expecting is going to be wonderful. And it will be easier for me to convey my thoughts, I'm sure. Though the things are really at a stage where there are many gray areas. PMLA law, the drafting of the law of PMLA itself is subject to various ifs and bounds, ifs and buts, and so is the scope and operation and exact meaning of the circular, the notification with which we are facing the situation today. But friends, I have a different perspective to it. I have been of this belief always that whenever responsibility comes, it also brings along it with certain powers. So you see it as obligations, because the title of my slides is also going to be obligation. That is what everybody is saying, and the chapter also contains the word obligation. I would use the word, along with obligation, I will use the word obligation and empowerment. You might be wondering why I am saying empowerment. You know, the clients used to take us very lightly, very casually, not seriously at all. Now it is not possible for them. Now, whatever you demand, they have to give. Otherwise, the law clearly says you have to refuse the transaction with him. So law gives you right to refuse that transaction. And it is not only you, any of your colleagues is duty bound to refuse such transaction. So virtually you will be empowered to teach the client to behave in a transparent, structured, organized, authentic manner, and not to take you for granted. So this can also be a perspective. So let us see this, whatever developments have taken place from both the angles. That is angle number one, with which we are seeing, that is obligations, heavy obligations upon us, and also see an opportunity to do business, or profession at arm's length principle, at a very, very methodical approach. So let us see from that angle. I can see people from media are there. I could read the name of Madam Lubna Kabli. And when I was Bombay, I got a lot of opportunities to interact with her, to listen to her thoughts. She has been writing very good. And I can see other galaxy of people. And my best wishes, my special thanks to all of you for joining this session. So I would be sharing, I have prepared some PPTs so that in a structured manner, I can explain my thoughts, whatever I am going to share it with you today. My PPTs are visible?
Yes, sir.
All right. So our whole idea is to hover around this chapter 4, which the heading of which is obligations of banking companies, financial institutions, and intermediaries. Now, these words in yellow, I have added myself, and reporting entities. So this is talking about obligations mainly of reporting entities with which we are concerned. And as Das sir rightly put up, that we are not concerned with whatever banking companies or other financial institutions do. Today, our concern is with reporting entities. One thing more before I begin my deliberations. Now, the casual expressions which we are using is now professionals are covered under PMLA. Now, it gives an indication as if professionals can be made liable for offense of money laundering. No, it is not that. It is not at all. What we are talking about is that there are certain people who have been roped in by the PMLA Act to provide certain information and to take some other steps to discharge their obligations of reporting and cooperating with the department. No, they have got nothing to do with offense of money laundering. Even if you fail in compliance of these obligations, it is still, you are not covered under the main charging section of offense of money laundering. It has nothing to do with that. It is to do with only collation of certain information and providing, furnishing of that information to the director. That's it, to the department, which we will understand what information, including KYC, maintenance of records. So maintenance of KYC, records, and furnishing to the director. That's it. And we will try to understand in whatever details is possible in today's session. So I will read this chapter's first section 11A. 3-4 sections are there. I will quickly read all these sections. Section 11A, verification of identity by reporting entity. And reporting entity, who is reporting entity, we will understand it. So reporting entity is to do authentication under Aadhaar or of passport, etc. And then verify the identity of its clients and beneficial owner. Now, this word beneficial owner is very important, on which we will have to make special emphasis whenever we will be discussing in detail. So client and the beneficial owner. So they have stopped at the word client only, but they are moving ahead of the word client. And that is what makes the thing sometimes, I mean, strenuous, extra obligatory, etc., etc. Then section 12 talks about reporting entity to maintain and furnish records. So maintain a record of all transactions. Now this word, kindly see whether attempted or executed. Here I would like to draw special attention of Das sir, because I really could not decipher the meaning of the word attempted. And that is where the law becomes very harsh. Now, transaction is executed, I understand. Now, what do you mean by attempted? Attempted means a person came, he sat with me, he discussed, we could not agree on the terms, maybe financial terms, maybe fee, maybe something else, maybe scope of work, and he goes back. Shall it be an attempted transaction? Or attempted transaction will be when he comes, he gives me advance, I do not do the business or profession or job, and I return that advance, then it will be attempted. Or attempted with what? He simply makes a query with me on telephonic or by personal visit, and then nothing happens thereafter. I really do not know. Maybe I need guidance from Das sir on this issue, and let us see where it goes. Furnish information to the director, the second obligation, and maintain record of documents evidencing identity of its clients and beneficial owners. Again, the word beneficial owner is there. So wherever our client is there, beneficiary owner, they have very carefully added. Maintain a record of documents evidencing account files, meaning thereby complete transaction files and all that. Maintain a record of documents evidencing business correspondence also. Very, very important. The mails we are writing, the things which are happening, everything is to be done here. The record to be maintained for a period of 5 years from the date of transaction or date of ending of the business relationship, whichever is later. So suppose transaction is done in 2010, relationship continues, which comes to an end in 2022, then the transaction has to be maintained up to 2027, not up to 2020 to 2015. Though the transaction was of the year 2010, but still we'll have to maintain it up to 2027. So this is also again a quite onerous responsibility, because for chartered accountants, client are their lifetime clients. So I would say then you have to maintain the records for lifetime, all these records. There is no other way. I mean, whether it is feasible or not, I do not know what they have thought about it, but they are saying you have to do it. Even otherwise, it is better to maintain the record for lifetime, because you never know at what point of time, what kind of summon is issued, what kind of queries are made, not only from the client, but their professionals also. Section 12A, providing information to the director. Then, as the section clearly says, director may call for the information under section 11A, 12 or 12AA. As we have just read, this 12, 11A. So the director may call for that information which you have maintained. And 12AA also we will read. The reporting entity to furnish information as may be specified. So he will call and the reporting entity has to furnish in the specified manner. Now this section was added subsequently, and that is why it has been named as 12AA, which the heading itself is quite impactful, that is enhanced due diligence. So the role which should be of an investigation agency, its bedrock is being created here, and our role is being assigned here, that we have to partner with the agencies to gather this information on due diligence. So again, they repeat first thing as verification of identity of clients by authentication under Aadhaar, etc. Then take additional steps to examine the ownership and financial position, including sources of funds of the client. So these two things, examination of and financial provision, including sources of funds, to what extent it is possible, what manner it will be made possible, what manner is to be done. I think precise guidelines are yet to come. Take additional steps to record the purpose behind conducting the specified transaction and intended nature of the relationship between the transactional parties. Even investigation agencies will find it difficult to give answer to this very serious question, but they are expecting us also to do this now. Additional steps to record the purpose behind the conducting the specific transaction and intended nature of relationship. Where the client fails to fulfill the above conditions, the reporting entity to not allow the specific transactions to be carried out. Reporting entity to increase the monitoring of the business relationship with the client and to make greater scrutiny of the transaction if these are considered suspicious or likely to involve any proceeds of crime. Now, this is very, very important line. I mean, in case of suspicious transaction or likely to involve proceeds of crime, we have to increase the monitoring. I mean, it is difficult for even investigation agencies to find out what transactions are suspicious and whether it is involving proceeds of crime or not. Whereas they have complete wherewithal, even then they have to toil very hard working. Still, it is not possible. I mean, this responsibility is really going to be very, very onerous. Then above said information again to be maintained for a period of 5 years, etc., etc. And then what do we mean by specified transaction? Withdrawal of deposit in cash exceeding such amount, foreign exchange, heavy value of imports, remittances for imports, or any other transaction as may be prescribed where there is high risk or involvement of money laundering or terrorist financing as may be prescribed, which is yet to be prescribed. Then suspicious transaction. This we must understand. Now, again, they are saying it includes transaction and attempted transaction. Then give rise to a reasonable ground of suspicion that it may involve offense of PMLA. Appears to be made in circumstances of unusual or unjustified complexity, or appears to have no economic rationale or bona fide purpose. Gives rise to reasonable ground of suspicion that it may involve financing of the activities relating to terrorism. I mean, I think I don't know how it is feasible to identify a specified transaction, suspicious transaction for a professional, that to doing a limited job, because you will see some of the professionals who have been involved in this and the kind of transactions which are involved in this or activities which have been roped in are very limited kind of activities. But still, this onerous responsibility may be put upon them. Now, what do you mean by transaction? Now, this is again very important to understand. It is because far away from the generic meaning of the word transaction. I mean, according to them, opening of an account is also a transaction. Use of a safety deposit box or locker itself is also a transaction. I am handling few cases under Benami law where there were safety boxes were found held in some other names, etc. So they have been treated as Benami. Now they have put in now this kind of transactions or this kind of whatever you may call Here also, I mean, under the obligations by a reporting entity, entering into any fiduciary relationship. So entering into fiduciary relationship means becoming a director or a partner, etc. Any payment made in respect of playing games or chance or cashing or including activities associated with casino. I mean, this has been specifically treated as a transaction. Establishing or creating a legal person or legal arrangement. Now, this is also a transaction, means by incorporation of a company or any legal arrangement by way of becoming anything, any formation agent, any director, etc., etc. So they will also fall within the meaning of the word transaction. But you will see in the notification, they have used the word financial transaction. So though all those activities will be covered in transaction, but whether they will be financial or not, that is what is to be also identified. Now then, next comes section 13. Powers of director to make inquiries and impose fine. Now, first of all, the word director does not mean director of the enforcement directorate. Director means a director appointed under this act, who may be director of some other agency whom government may designate. For example, director of FIU, Financial Intelligence Unit, is the director for the purposes who can make inquiry whether the reporting entity has fulfilled the obligation or not. He can also order an audit by an accountant from the panel of accountants maintained by the central government of the reporting entity. In case of failure by reporting entity, the director may issue warning in writing, direct for compliance, direct for sending report in prescribed manner, and last but not the least, penalty from rupees 10,000 to rupees 1 lakh. The amount looks to be smaller, but the words added are each failure by the reporting entity, or its designated director, or the board or an employee. Any of them. See, look, employees also been covered. Though employee should be designated employee. Designated means he should be designated to do this business, do this obligations. Now, failure 10,000 each failure. Now, if each failure means if there are 100 transactions, 100 not recorded for some reason, then 1 lakh into 100, whether they will multiply it like that. I mean, how would they do? I mean, this is a gray area. Then, whatever you have read so far, you must be thinking, sir, what is the procedure? So, section 15 talks about central government may in consultation with SBI, RBI, prescribe the procedure and manner of maintaining and furnishing information by reporting entity under so and so sections. Now, few important things, few other definitions which are very important here. Who is reporting entity before we go to the procedure? Because you must be thinking we have talking about reporting entity, but who is that? So, reporting entity is defined under section 2(1)(WA). A, B, C, these three institutions, let us skip. Fourth is very important. A person carrying on designated business or profession. Now, what is designated business or profession? It is defined in section 2(1)(SA). A person carrying on activities for playing games, specifically included. Then registrar of properties, real estate agents, jewelers. Last but not the least, person carrying on such other activities as a central government may by notification so designated from time to time. Now, here comes the role of these two notifications, because these two notifications has been issued under this section, that is section 2(1)(SA) subclause 6. Now, Ministry of Finance on 7th March 2023 issued the notification for amendment in section 2(1)(A). Now, this circular was also issued, probably this skipped our attention. This is with regard to virtual assets, Bitcoin, etc., etc. Now, this I am skipping it. I hope it is in knowledge. We are talking about these two notifications. The earlier notification was there. This is the first one. Then we come to the second one. So this first one was with regard to this all Bitcoins, etc., all reporting to be done. This comes now on 3rd May 2023. Its wordings are very important. Financial transactions carried out by a relevant person on behalf of his client in course of her profession. So important words are, it should be financial transaction carried by a relevant person, and it should be on behalf of, not for himself, on behalf of his client, and also in the course of his profession. Not a casual transaction will be covered here. So what transaction? These 5 transactions. Buying and selling of an immovable property, managing of client money. Now, buying and selling of property means on his behalf you are doing it, not that he is doing and you are just advising. No. So you are taking some active role with the help of some power attorney, taking money, giving money, buying property, giving it to him, etc., etc. Then managing of client money, securities or other assets. I mean, by way of collecting money, managing it, say by way of portfolio management services, or in some other manner, where control on the money is of yours, and you are managing on his behalf. Similarly, managing of securities means this PMS, etc. If you open, you direct, you are handling everything. Then management of bank accounts. If you open the bank account, you are becoming authorized signatory in the bank account, managing the account, issuing instructions, taking instructions, etc. Then fourth one is organization of contributions for creation, operation, or management of company. I hope it will include arrangement of funds for a company. It would be a financial transaction, though there may be a second thought that it will be covered only when you receive a fund and then give to the company. But the words used here are organizing. Organizing means it can be directly organized also. If you are making active participation, if a professional is making active participation in creation, operation, or management of the companies, for organization of contributions for creation, operation, or management of the companies, it will be covered. Last but not the least is creation, operation, or management of companies, limited liability partnerships, or trusts, and buying and selling of business entities. So, I mean, what do you mean by creation here? What do you mean by operation management? Operation management is clear. When you are operating, you are instructing everything. You are becoming participant in the management. But what do you mean by creation? So whether creation will be when you create your own name, of course, it will be creation. But when you simply accept the documents, prepare the documents as a company secretary or a chartered accountant, and upload them on the web portal of ROC, do the requisite process, and get the company incorporated, whether it will be covered. Now, this is a very, very important issue. Apparently, I mean, it will be covered because they are talking about creation. But it is still a gray area. Though in next circular, some exclusion are there, whether the benefit of that exclusion will be given here or not, that is also what is to be seen. But as of now, the conservative view would be yes, because you are creating, and the law is expecting that you become partner in monitoring all such activities. Because our present dispensation has given greater emphasis on this white collar crimes, and they think that beyond tax laws, they are needed for the sake of cleaning of the economy and streamlining of the economy. Then who is relevant person? Now the definition says relevant person includes. They are not saying all these three things. So these are included and others may also be included. So this is an inclusive definition, not exhaustive definition. But the irony is that they are talking about profession during the course of his profession. So it should be done in profession. So one thing is clear, that relevant person means some professional. Otherwise, why would do somebody in the category of in the course of profession? But the counter to that may be that means any of these persons who may be professional, or any other person who may be doing it in the course of profession. So what is important is it could be any person, including these three, who may be carrying on profession, and during the course of profession, he does all these activities 1 to 5. That is the meaning which I can understand as of now. Then it will include firm also. The 9th March notification, which is also equally important, it talks about activities carried out by a person. Now, instead of relevant person, they are saying a person. Now, they could have said in the earlier notification also simply a person. I do not know why the word relevant was used there. On behalf of a client. Again, the importance is it should be done on behalf of a client. Such person will fall under definition of section 2(1) SA. What activities? Acting as a formation agent. Now, I do not know where here there is no concept of formation agent for companies and limited liability partners. It is in Singapore and a few other countries. But it appears that whatever this business was done by Chinese companies, probably there they have used the companies have been incorporated in such a manner that the directors or the shareholders did not come forward themselves and they took use of the services of the professional. Then acting as or arranging for another person to act as director. So becoming a director or arranging somebody and making him director. This activity will be falling within this notification. Providing a registered office, business address or accommodation, correspondence or administrative address of a company or a limited liability partner. If you do so, you become a reporting entity. Yes, if you are entering all these things as a tenant-landlord relationship, then there is no problem because there is a specific exclusion. So enter a rent deed and then this clause will not be applicable. Then other is also important, acting as or arranging anybody else as trustee. So becoming trustee has become becoming now this much responsible, bring will this much of responsibilities that you will become reporting entity also. Then acting as or arranging for another person to act as nominee shareholder for another person. Now in holdings, wholly owned subsidiary, there used to be 99% shareholders of the shareholding of the holding and one share at least of the nominee shareholder to make the number 2. But becoming nominee means inviting the obligation of reporting entity. Now these activities I have read, this lease deed is not applicable. Then somebody, if he's an employee, if he becomes director, then it will not be applicable. Then any activities which is carried out by advocate, chartered accountant, cost accountant, company secretary, who is engaged in the finalization of formation of a company to the extent of filing a declaration. So you would remember that when the memorandum, etc. is finalized, its subscriber sheet is there, then which is to be witnessed, which is to be shown that yes, everything has been done in the presence of the professional and everything is as per law, etc. Whatever declaration is there. So filing of that declaration will not be counted as an activity, these activities. So now if you may come up, now since this declaration has been excluded, therefore filing of the documents at ROC should also be excluded. This can be a view. But counter view would be whatever they wanted to exclude, they have specifically excluded. If they have not excluded the filing of the documents, etc., then that should not be excluded by us. Now another counter to that can be when the final sheet, because documents ultimately are signed by the same person who signs the subscriber sheet. If that itself is excluded, why should filing of documents will be included? Again, this is a major gray area. Conservative view would be that it will be included. Then who is client? Now this is very important. Whatever the definition of a transaction can be, but client says financial transaction or activity. So it should be a financial transaction or financial activity with reporting entity and included a person on whose behalf the person who engaged in the transaction activity is acting. So again, beneficial owner will be covered here. Now, what is beneficial owner? It defines beneficial owner as an individual who ultimately owns or controls the client of a reporting entity, or that person on whose behalf a transaction is being conducted, and includes a person on who exercises ultimate effective control over a juridical person. Now, very vague definition, but very sweeping. Now, before I come to the rules, I will like to save time for question answer session. Only broadly, I will define what do rules mean. In fact, rules contain 3-4 things. Number 1, what records are to be maintained and by whom, on what transaction, how they are to be furnished, what are suspicious transactions, and what will be the manner of furnishing whenever there is an inquiry, how due diligence is to be carried out, how KYC is to be collected, KYC identification is to be collected, and how the KYC records is to be submitted to the designated authorities. That is KYC record registry. So, I mean, these are quite detailed. And for today's session, because today we are having a conceptual discussion, we can have another workshop on it. Once the further prescriptions are there, because certain things are yet pending to be prescribed. So I think with this, before I end, I just wanted to share with you, we are not first to implement it. Canada, Europe, United States, Australia, they have already implemented it in pursuance to the guidelines of FATF. And since we also want to be compliant of FATF, Financial Action Task Force, we don't want to be blacklisted. Therefore, our country's legislation has also enforced these requirements. Thank you very much.
Thank you.
Basic framework is concerned.
Thank you, Ashwani. I think
which you have already circulated or any other question. Thank you very much.
yes, it really sets the ball rolling in terms of actual ground realities. So in my mind, I just have this one conceptual disconnect, and maybe you can help me solve. There is this first circular of 3rd May, and there's the other circular of 9th May.
Yes.
Now, the 3rd May circular lists down the 3 professionals and lists down 5 services which are covered.
Yes.
It also says that this will apply to in the course of profession.
That's right.
But when one sees the 9th May circular,
Yes.
it talks about in the course of business, does not include the 3 professionals specifically,
Yes.
and lists down additional 5 services.
Yes.
So if we go by that plain reading, it kind of appears that professionals can't be in business, and hence, both are covering 2 separate aspects. But there is an exception or an exemption which you read out,
Hmm.
where chartered accountant, lawyers, and company secretaries, if they give that declaration of incorporation, to
Hmm.
that extent they are exempted.
Hmm.
But wouldn't the 9th May circular kind of restrict only to in the course of business, which profession and professionals anyways can't do?
It appears to be so, but first of all, I must also make it clear that both the circulars have been drafted as if very in a hurried manner. I mean, it could have been drafted much better to avoid all these vague situations. But since they are talking about exclusion from chartered accountants, etc., here, if they were not covered at all, what was the need of exclusion? So again, we'll have to take a conservative view here also. So if any professional or any other person, it is applicable on all. If they do these activities, then it will be covered.
Yeah.
I think wherever Das sir would like to add any extra point, that would be very, very useful.
You are right there. Basically, a person can have a dual responsibility. You can be a chartered accountant. You can also be a company director as well. So you can have certain liabilities, compliance liabilities as a designated person, as a professional, and also as a director of a business, as a designated business. So both are not incompatible, because both can become two different responsibilities. And that is, just as I told you, it is because the large number of infusion is taking place, proceeds of a crime, illicit financing is taking place. Clear-cut intelligence and clear-cut warnings have come only through the structures, corporate structures. That is why these things have been done. And as I told you, it is on the eve of this mutual evaluation and fine-tuning and guidances, we will find out in the next so in a year or two coming up, and maybe sooner also. But the guidances are available worldwide. Like Suniji was mentioning about what is attempted transaction. Attempted transaction, I have shared with the hosts this thing, giving a couple of examples. So it is one of inquiry is not an attempted transaction. Whereas some act takes place, and it is already guidance note is available for other countries, for European Union countries, for USA, goodness sake, large number of countries. What is attempted transaction? What is attempted transaction per bank? What is attempted transaction for lawyers? What is attempted transaction for accountants? It is already, we don't have to invent it. It is already available. Our government will probably, in due course, will also elaborate on it and guide it. But what is already available, we have access to that. So it is clear, but I have shared it with you.
Yeah. Mr. Das, I think one more point that comes up is, aren't there anyways enough checks, balances, KYCs on professionals? Like, for example, there is section 54 in the PMLA Act itself, which says that all the members and officers of Institute of Chartered Accountants of India essentially have to support any inquiry that the Enforcement Directorate would want to conduct. We also have KYC requirements from the Institute of Chartered Accountants of India. And from 1st October, there is also NOCLAR, which mandates chartered accountants to also make sure that non-compliance of laws and regulation is reported. What we have done here is the circular is verbatim taking the 5 services which are mentioned in the FATF recommendation 22, and that is coming in the 3rd May circular. But in a way, isn't all of that already there in our framework, and we are kind of repeating some of these things?
It was not directly there. And you can imagine section 54, you are bracketed with a large number of people, almost 30, 40 kind of people who are to assist in inquiry. It is not inquiry. Inquiry comes much later. It is a preventive part. What I have told you and mentioned to about you, the recommendation in 2010 was for preventive thing. It is not that whatever action it has taken place, money laundering has taken place, inquiry is taking place, there you are assisting, that there you are certain obligations have been cast. That is not something similar to what is now being done. It is a preventive measure. It is here you are at the forefront of this money laundering activity as a watchdog. You are a preventive watchdog. Watch back.
Understood. Understood,
So
sir.
that
Very
is
Ashwani ji, one of the things that is little bit unclear, at least to quite a few of us, is the coverage of services. Because as professionals, we render multiple different services, right from internal audit to say virtual CFO to tax advisors, fundraising experts. What kind of services, let's say something like an internal audit of entities, whether it is akin to assisting in managing business, if you are rendering virtual CFO services, is it similar to managing businesses? How does one look at that?
No, I think first of all, there is an exclusion for an employee straight away. So even if you are a CFO, it does not matter. So activities are only those which are covered here. If is your client and you are offering managing services, then the circular will be covered, not in the capacity of an employee. Similarly, other things are not covered, even if for client. Only those which are mentioned here, they will be covered. Manage M&A affairs will be there, buying and selling. That may be covered depending upon how you structure it.
Yeah. So let's say, sir, for example, if at all my client requires me to make tax payment on his behalf, quite a few instances because of some bank not being empaneled on the tax portal, etc. The chartered accountant would make that payment and then reimbursement would come in from the client subsequently. Would that amount to managing client funds, assets, bank accounts as per this definition?
Actually, in that case, you will become very close to the definition of financial transaction. So the conservative view, which I would like to put forth, though it does not sound to be reasonable and logical, but I would like to give this view that it is better you help him, guide him how it is to be paid, stay away from collection of his money and then making reimbursement and all that.
yes.
And there may be reason also for this, because certain people are under the guise of this reimbursement may have taken huge money, taken here and there. I think something must have gone. So it is better to stay away from that exercise.
See, I'll supplement here. Supposing you have paid his cash on his behalf, you are fully covered under this. You have to maintain the records because, and also, supposing he gives you, because it has not been prescribed for you as yet, and it will be prescribed, but it will be covered. Supposing he tells you that you have paid 2 crores 50 lakhs, 2 crores I am giving you by check, 50 lakhs I am giving you cash. So it becomes a suspicious transaction. You will be duty bound not only to record it, but also to report it.
Understood, sir. Ashwini,
or check from a source, like you are paying for for an individual, but the check comes from an offshore company or a cell company or something like that. You see, you know, in fact, CA knows what he is doing, what the client is doing, whether the transaction is a clean transaction or a dirty transaction or nearly dirty transaction. So that's it.
Sorry, you were saying something, Ashwini ji.
Yeah, I was saying somebody has mentioned that CFO is not a virtual CFO is not an employee. Then it will be covered because you are doing it in the course of your business and you are managing the company. Straight away covered.
That is correct. Sir, I mean, from the wildest of my imagination, if I see these 5 services, statutory audit doesn't seem to get covered in these 5 services.
Not
But
at
when I
all.
saw, yeah, but when I saw this recommendation 23 in the FATF, it says that countries are strongly encouraged to extend the reporting requirements to rest of the professional activities of accountants, including auditing.
We have not done it so far. In
So,
India,
but
we
wait
have
for
not
it.
done
Wait for it. Something bigger might be coming. NAFRA has already been, created. So
Yeah.
these norms have been created. Heavy responsibilities always already there on the auditors to maintain so much of records from various angles. Maybe for this reason also they have not come up so far.
Yeah. And the related points are again with this recommendation is that the FATF recommendation starts by actually saying that lawyers, notaries, and other independent legal professionals and accountants. But what we are seeing is that it's predominantly restricted to accountant, company secretaries, and cost auditors, whereas lawyer, notaries, and independent legal professionals don't find mention. Any thought process or backdrop on that?
As far as 9th May circular is concerned, it covers everybody.
No.
Yeah.
9th May will cover indirectly, but in this thing it has not been covered. I hinted that when in 2010 it was done, it was found that the threat and risks in respect of chartered accountants are minimum and some medium, whereas from lawyers it was considered to be lowest.
Yeah.
So for the time being, because in other countries lawyers are covered, in USA lawyers are not covered, and basically for the time being lawyers have not been covered, but the writing on the wall is still there, and it is sooner or later they are going to be covered probably. And mind you, you don't go to other recommendations. Go to only recommendation 12 and don't go beyond. It is at the preventive stage that you are covered. You are not being dragged to the other more important recommendations now.
Right. Understood. Mr. Das, one question that comes is quite a few of us are firms, LLPs or partnerships. And then we are individual practicing chartered accountants who are associated with a firm. Talking about professional services firm and in that context, whether the obligation lies on the individual practicing chartered accountant to make that particular reporting, or is it an obligation of the professional services firm as a whole to make that reporting?
I don't think it is a joint responsibility to be available. It is a collective responsibility. You cannot run away. Neither firm can run away from it, nor the individual can run away from it who has transacted. So that is probably what I would mean. But it is not clear from the law anywhere that they have said so. But when they prescribe the rules and forms, I hope these things will come up.
Yeah.
Second thing which we can notice here is, if you see, they have given in the explanation 1 that for the purpose of this notification, relevant person includes an individual who obtains COP and practicing individually or through firm in whatever manner he has been constituted.
So it is covered. I think it is none can say that he is out of it.
But my view is direct obligation is of the concerned individual. Because they are saying an individual, whether working solely or through firm. So focus is on that. They are not saying that this relevant person includes an individual or firm. They are saying it covers individual, whether working singly or through firm.
Let's see what happens. I'm extending it to this thing. In USA, what happens? Like a particular bank employee goes rogue and does some money laundering transactions. But he is doing it on behalf of the bank. And when caught, the penalty is a hefty penalty is levied not only on the employee, but also much more on the bank. Because You should have internal control and this thing to handle it. So, same thing, juxtaposing that to a chartered accountant and his LLP or his firm, it would be probably same.
Understood. And a related point, sir, in that regard is there is also a requirement to appoint a designated director or a principal officer and identify that person who will be, a person who is SPOC for making these reporting obligations. So, is that mandatory to professionals as well to appoint this designated director?
So let us wait for the rules.
Yeah, and it is, I think, will be advisory because only then it can confine to one person. Otherwise,
Correct.
as you are apprehensive, it will become, enlarged. Scope may be enlarged. So it is better to designate a person.
Understood. And then the filing obligation with the FIU, IND and all of that.
Yes.
Go
Will
hand
be
in
that
hand.
much of that person.
Yes.
Sir, before we take some audience question, I had one last question on section 14, which is the saving section, to
Yes.
say that there will be no civil, criminal, or any other liabilities on
Yes.
the reporting entity.
Yes.
Now, there can be two ways to look at this section, sir. One is that if I am giving confidential information of
Yes.
my clients
Yes.
to the reporting, as the reporting authority, then my
Yes.
client can't sue me for civil, criminal, or other obligation.
And what is the other view?
The other view is that essentially against me, there can't be any civil, criminal, or any other proceedings if I fail to discharge my obligation.
First
How
one.
does one
First
no,
one. Surely first one.
Not
Only
Not
saving
this.
you from your client. They are not
Because-
saving you at all. It's
Hmm.
they have intention that, look, we are empowering you. You furnished whatever you have to us. If somebody touches you, we will take care of that.
but they can come behind as far as criminal, civil, and anything is concerned against the reporting entity.
No, in
Oh.
fact, as far as this is concerned, these are confined to penalties only. It is mentioned 10,000 rupees, 1 lakh for each failure. So no other punishment has been prescribed.
Okay.
Unless they hold us liable for the offense of money laundering. Us means any person who is involved here, and they say that you are also perpetrator, you are accomplice in terms of section 3, read with
Hmm.
section 44 and 45 of PMLA. That is extremely different situation. Not as a reporting entity. Reporting entity
Hmm.
only liable for penalties and fines. That's all.
You see, when a reporting entity can become liable for offense under section 3, that is offense of money laundering, it becomes when knowingly you know that this gentleman has done some money laundering, illicit financing, infusion of proceeds of a crime, and having known that you have not reported and it was caught, then there is a possibility, there is not a possibility, there is a certainty that you would be an accomplice and you would be covered squarely under section 3. But I don't think such a situation will arise. It is recently nearly 300 to 400 people from accountant community have been reported to the institute for this Chinese apps and all those things, those who have created. And it is quite a large number. And it is for a disciplinary purpose only. It has gone. So something like that. They did not think it would be proper to proceed against them under money laundering offense. They knew that they have not done money laundering per se. They have done some business, but they have done some accounting business, not knowing what it is, signed it blindly, or it is like that. So they have told that probably disciplinary action will be sufficient. So, but if knowingly somebody does it, then it will be covered under section 3.
Understood.
Mr. Anand, there is one way of quickly finishing, covering all the questions. Now, whatever questions I see on the list of Q&A, so can I myself quickly take them up and quickly reply?
Yes, please, sir. Absolutely. That will cut out my task.
And thank you, because we are short of time and I do not want any question to be unanswered to the extent
Yeah.
to the best of our abilities. So first of all, paying the taxes from the amount we have already discussed. I mean, better it is to not to do that. Adequate records. Look, now we have to go by rules. So whatever rules are saying, that have to be maintained. Whether they will be feasible to maintain, I do not know. We have to churn on that. Maybe we have to file some writs in the High Court. We have to come together, maybe on the banner of BCA. There are various issues where I will request Honorable President Mihir and Anand Bhai, you also, that let me jot down the issues and under the banner of BCA, let us file some writs. Because they are saying something which is, I mean, infeasible also to me. We want to help. Everybody wants to help, but something infeasible, how can I do that? Then, sir, somebody is saying there is a perception of treating everybody as guilty unless proved innocent. Look, this, as far as these circulars are concerned, these are only with regard to obligations. They are not dragging you under PMLA. Is there any impact on amendment on directors of the company? Look, if you are acting director on behalf of somebody, then there is a problem. If you are directing your own capacity, it has no problem. Yes, Anand, I have read in your biodata also, you are also independent director in many companies. So this question has not come up so far. Becoming independent directors in many companies is not applicable here, because you will anybody will become independent director in his own capacity, not for client. The entity of independent director you will become is not your client. If it is your client and that is why he is taking you as director, it's a different thing. Otherwise, not applicable. Then you will not become reporting entity. Then lower deduction tax certificate applied for the purpose of assistance in to the lawyer to finalize the purchase or sale of deed. No, it will not be covered, because that will be purely advisory. You are not doing buying and selling of the property.
You left behind a trust related transaction made by managing committee of the trust.
Yes, sir.
So that is if you are doing it as in your capacity of a chartered accountant, you are also you are doing audit. You are a chartered accountant. You are also become a managing committee of that trust also. Then it will apply. But in your individual capacity, if you are residing in a cooperative society and you become a member there, or this thing, that will not apply, because there you are not doing it as a chartered accountant. You are only as a resident. So
I think most of the questions are covered. Any threshold for reporting? I mean, as per rules, certain transactions are prescribed. In some cases, 50,000, in some cases, 10 lakh. Some cases, they are also saying transaction may be lower than 10 lakh, but if they integrated transaction, then each transaction has to be combined, totaled up together, and then see 10 lakh limit. So we'll have to go by rules. There is no other threshold. Whether writing of books of accounts of the company, raising sale bill. Yes, sir.
threshold,
you want to say something?
If they want to prescribe threshold, when the rules will come, they may prescribe. Other than that, there is no threshold.
So whether other professions are also covered? Yes, because it's an inclusive definition, other professions will also be covered. What is focus is on the activities. If these activities are done, covered. Whether acting as a trustee or as an office bearer of a trust are covered under PMLA, even though it is not in the course of business. I think if I am not CA or CS or everybody, I just trust chooses me to be trustee and I become trustee, then no problem. So you are doing some activities for the trust and the trust needs you and then you become trustee. There they want to cover you up, I think, not otherwise. Otherwise, every trustee will become reporting entity. It will be very difficult. I think that's it.
No, writing books of accounts of a company,
Yes,
it
sir.
will be probably, it is neither managing client money, securities, it is not covered under any transaction. So probably it is not probably covered. Why probably? Certainly not covered.
One very important question has come, sir. Yashpalji is asking it. If a transaction happened many years ago, say 2012,
Oh, that is
obligation now.
No. It is.
I pray it should not happen like that.
No, it will not be covered. It is only.
Yes, sir. becoming treasurer of CHS society. He is not your client. CHS society means you must be living over there. You become treasurer, no problem. He's not your client.
And frankly, the idea of paying appeal fees from your pocket and getting it from letter from client better be avoided. It is the certain kind of discipline be maintained. Like this sometimes causes problem. No lawyer does it. So,
Sir, one important question is asked, sir, by Nemin Shah, that how will these notifications will be implemented during the interim period when specific rules are not yet prescribed? If rules are notified, can they apply retrospectively? This is an important question.
Yeah.
Till very frankly, when rules are not there, it is difficult. It is what you will report. You can't report something. But if these transactions are taking place, you will have to faithfully keep a record. That is what you have to do.
Yes. So,
but you may not be able to report, but you will have to maintain the record.
So, sir, I will take it as last question, and I would answer it like that. Broadly, understanding is there that you have to maintain account files, business correspondence files, and you have to deal with them at arm's length principle, and maintain the record in a manner that if whole structure of the client is asked to the extent possible for you, you are able to furnish it. That's it. At least start doing this. Rest we will see as the things will develop. And this much is very rational, reasonable in any developed economy. Otherwise, how can you monitor the economy? How can you control the economy as a government? If, I mean, the things are not done transparently. So I think that's it.
No, wonderful, Ashwani ji, Mr. Das. I think we have cleared a lot of our doubts, anxieties, cobwebs that we had around this being preemptive versus reactive. What is our obligation under which circular? Of course, the rules will come and give more clarity as we go forward. But at least the awareness today will help us a lot in terms of performing our roles better. Before we end it, may I please request Zubin Bhai to propose a vote of thanks and announce certain events.
Before you announce vote of thanks, one thing I wanted to say. This we have been telling at forum, Das sir, our other partner, Mr. Amit Khemka, we have been telling right from, for last 2 years, that we chartered accountants do not deal at arm's length principle with the clients at times. For example, even their digital signatures are, found in our drawers, and we use their digital signatures. And if I tell a chartered accountant, brother, why are you using? So he says, why? What is the problem? We have mutual trust. I and my client have mutual trust. So, this is a first breach of the arm's length principle. No. Number two, earlier, the cost of non-compliance was low. Now the cost of non-compliance is very high. Earlier, the responsibility was that I have to simply do the things rightfully, legally in a rightful manner. That's all. Now one added obligation is there upon us, all of us, as a professional, as a businessman, as a citizen of this country. That first obligation remains as it is, that I have to do the things rightfully in a legal and legitimate manner. And I have to keep with me enough documents and evidences to prove that I have done the things rightfully whenever I am called upon to do so. This second obligation is very, very onerous. And because of these 2 circulars, 2 notifications, this obligation has been now legitimate, has been made specifically clear by the government also. Yes, this obligation is there upon you. So get rid of Benami life, live real life. Thank you very much.
Thank you, Ashwani ji.
Thank you, everybody. Before going on to the formal vote of thanks, some announcements of the forthcoming events. We have a packed calendar even in the last month of June. Starting from 2nd June, we have a lecture meeting on succession planning, which is being held now at a venue in the suburbs as based on popular demand. Then TDS and TCS provisions, a 360-degree perspective is again there on 2nd June. It is at the Walchand Hirachand Hall, organized by our taxation committee. Then another interesting program on an interesting and emerging topic of ESG decoding ESG through the internal auditor's lens. It's a hybrid program. Then there is a half-day workshop on audit automation tools by the Technology Initiative Committee, which is a virtual program on Saturday, that is on 10th June. On 12th June, the Indirect Tax Law Study Circle has organized the program on practical issues in GST refunds, which is also virtual. Then another very important program, and this is more for the senior chartered accountants. It is a workshop on technology precautions and useful tools for senior chartered accountants. It's a half-day workshop on 16 June by the HR committee. It is at our BCAS hall. Then the Suburban Study Circle meeting is there on audit trail, compliance under CARO 2020 by practical challenges. Then 23rd June, there is a workshop on strength pillars of relationships by the HRD committee. And finally, the most important program, the 17th residential refresher course on GST from 22nd to 25th June, which is at, I think it is at the Leela Hotel, Gandhinagar, organized by the Indirect Taxation Committee. So as usual, we have a packed month of June. Now coming on to the vote of thanks, I am sure all the members of the audience will acknowledge that this difficult topic has been decoded in quite a simple manner and a reassuring manner in certain matters also for us professionals, because some of the messages given that certain activities are not covered should at least give us some solace, if not entirely. I think some of the learning messages which were given, that how to basically maintain arm's length relationship, try and be real and benami, are very profound messages which have been given and which all of us should adhere to. Let's hope that the rules also bring in some clarity. And prior to that, at least the reporting obligations, at least the record keeping obligations, at least should be there, which in any case have to be there. Now they need to be reiterated a little more. And also we now have a tool to tell our clients that, sorry, we cannot do certain things. I think that is also a very clear message which has come across. So with all these things, I would request everybody to carry a very loud virtual round of applause to all our panelists, Mr. Dash and Mr. Taneja, along with our moderator Anand for very ably moderating the session. Also thanks to Kinjal for the introduction of the speakers, and finally to the President, sir, for his opening remarks. So with that, I would request all of you to carry a very loud virtual round of applause for this very enlightening discussion.
Very large applause indeed. Very revealing and very enlightening. Thank you, everybody.
Thank you. Thank you very much. Thank you.